I was so elated when I came back Far East that fall of 1993 and seeing that article. I said, my word, this is exactly what I've been teaching here of infinite banking concepts, using life insurance as the place to the primary location of your capital.
Good morning, Nelson. It's great to be with you again.
Oh, good to be here, of course.
I just wanted to take you back again for a moment to the acknowledgments at the beginning of the book, Becoming Your Own Banker. And you were reminiscing earlier about a gentleman named Roland Nelson. Can you tell us a little bit more about Roland?
Yes, when I was in the first in the life insurance business, I was introduced to him on a very favorable basis, and he became a substantial client, and it became a close friend. This has developed down through the years, and a lot of the background of putting together the concept of infinite banking involves Roland Nelson. He has been involved with me on several real estate deals and things of that nature. Now, Roland was a independent druggist here in town. Now, there are a number of independent druggists, not like Rexall or like CVS, so forth. They're independent folks. And the organization that pretty well got them up and going was Walker Drug Company, a wholesaler that operated all over this state. Anyway, after developing this concept pretty well along the way, and particularly after having read and concentrated on the effects of EVA, economic value, second issue of September 1993, cover story of the book, that this has changed the business world big time. I had the brilliant idea to call on Walker Drug Company and introduce them to this. And so I got the very favorable appointment and was meeting with the chief financial officer of the organization plus their CPA. Fairly early in the conversation, introducing them and making sure that they understand the concept of EVA, that capital has a cost. About that time, the CPA interrupted, said, "Oh no, our capital doesn't have a cost. That's ours." Well, I may be slow, but sometimes I come up with something pretty good. All of a sudden, I looked at my watch and I said, "Oh my, what a mistake I have made. I have an appointment across town at this same time that I overlooked. Please forgive me. I've got to go. Let's take this up later." Jason, I didn't bother to go back because there's no way you can get that idea out of a CPA's mind. But it does have a cost. Now, the article by Sean Tully in Fortune magazine there, some of it is a little bit convoluted, but after all, he's writing an article there for people to get acquainted with, but as far as depth and so forth, it's not there. But what he is alluding to, whether he knows it or not, goes back 300 years ago to Richard Cantillon in Europe. He was a banker and so forth. And you can really trace the roots of the Austrian school of economic thought back to Richard Cantillon. Let's see, one of the Mises guys has done a great deal of work studying that particular fellow. Well, heck of it is that that's understanding that capital has a cost has been there for a long, long time. But in the everyday activities of people kind of forgot it. And so here was a rediscovery of it. We talked about the Forbes ranking of the 25 richest families in America, and that by far and away the richest was the Walton family. But what we did not discuss is the fact that worldwide, the world headquarters of Walmart is in Bentonville, Arkansas. They buy manufactured goods from all over the world. Now, when they buy these goods, all of it is shipped to distribution centers, and I think there's around 150 of them worldwide. All of the merchandise goes there. Now, the retail stores that we buy from, they are buying that merchandise from the distribution center. Therefore, they are obeying what EVA does automatically.
And the grocery store example.
Yes. Yes. And so you see, I was so elated when I came back Far East that fall of 1993 and seeing that article. I said, my word, this is exactly what I've been teaching here of infinite banking concepts, using life insurance as the place to, a primary location of your capital. That you automatically do what Stern Stewart was teaching, and you don't have to pay them those high consulting fees. All you got to do is just buy lots of life insurance and make sure that everything goes through it first, just like Walmart does that. All of the merchandise first goes to the distribution centers. And those distribution centers are located within 150 miles of the stores, the retail stores. And so this makes it very efficient in getting the merchandise from the distribution centers to the place where it's going to actually be sold. Now, does that give you a clue as to why they are the richest family in America?
It's something to think about, isn't it?
Yeah. And it has nothing to do with rates of return at all.
Right.
It has to do with how many times you turn it over.